Next exciting session and topic of the day, and also it is our last presentation session of the day, so I would require all of you to kindly appreciate this session and give your best in, because it's again on a subject which is absolutely unique from what we have heard since the morning. The beauty of today has been every session, every panel, every presentation topic has been absolutely unique from the other, making it a unique experience for all of you here. The next session on going beyond KYC and two-factor authentication. And to present on this exciting subject and topic, I would like to call on stage with a big round of applause, Ms. Anjum Babaiah, General Manager, Decision Analytics from Experian, India. A big round of applause for Anjum. Anjum, all over to you.
Thank you. Hi, good afternoon, everyone. I'm a little concerned because he just mentioned that this is the last presentation of the day, and I'm really also worried of the fact that we're just after lunch. So I know it's a good time to take a snooze and all, but I would request if you could kindly just spend about 20 minutes in this conversation, which is going to be interesting. I'll try and keep it, a little bit humorous as well, if it's possible. But here goes. Fraud is not an easy topic to talk about. It's a little bit more grim. It's a little bit more, serious in nature. But it is our reality, and it's something that we all need to abide by, and we all need to worry about quite a lot as well. So I'll start off with an adage, right? A few years back, one of this very prominent bankers actually told me that if we do the correct and accurate ID verification, if we get that right, fraud prevention will take care of itself, right? It's going to be reduced. You don't have to spend as much on fraud prevention and so on and so forth. But I think one of the biggest cons that's really come out of the last few years with this big panacea that we've called as digitalization is the fact that now ID verification and authentication is not what it used to be a few years back, right? Now fraudsters have many, many more different tools at their disposal in order to be able to circumvent ID verification, circumvent KYC, circumvent authentication in the way that we have always seen happen for so many years. And that's one of the reasons why I think it's important that we start going beyond KYC, start going beyond what we think is ID verification, and start going beyond what two-factor authentication really means in our ecosystem, right? So today's talk is really going to be about how as an industry, can we really get to know our customers better? Can we choose our customers better? And finally, can we protect our customers better? Moving on, again, this is a very, very important and thought-provoking slide. All fraud, all kinds of fraud actually happens in an authenticated session. So your fraudster has been able to authenticate themselves, has been able to ensure and give you enough of confidence that I am who I am and I am going to do what I'm telling you that I want to do, and then gets into the system, gets into a session, and then is able to perpetrate fraud. That's our reality today, right? So at the end of the day, authentication, what we are doing today, is it really enough? And what can we do over and above that in order to be able to actually nab what we are terming as fraudsters, right? People who are bad actors in the entire system. Now, I'll just quickly take you through two use cases, or through two examples of how fraudsters really operate. Now, I understand all of you guys are from the fraud risk community. A lot of you guys are doing investigations. These must not be new use cases or stories to you. But at the end of the day, fraudsters are really relying on two specific emotions that we as consumers exhibit in order to be able to perpetrate that fraud. Number one, greed. Number two, fear. So if you start off with the story of greed, very simple. Fraudster number one, being able to take data out of a bank or of any other company like a Facebook or Instagram or so on and so forth. He sells this data to fraudster number two over the dark web. So it's also important to understand what's going on the dark web as well, right? The next thing, fraudster number two, your Jamtara variety starts and makes an application, right? Now this application could be anything. For just for the sake of argument here, I'm saying it's an insurance application, right, for an insurance policy. But makes that application in at the same time, laying the trap with the customer, calling him up, giving him an incentive, a freebie, 1,000 rupees Mindra voucher, your number's been selected, you are the lucky one, go ahead if you just want to avail it. There's an OTP, I'm sending it right to your number at this moment, give me the OTP, and instantly I'm going to give you 1,000 rupees of Mindra cash vouchers, right? What happens in the interim? The insurance company is doing some sort of KYC check on him, right? It could be an Aadhaar KYC, it could be a PAN KYC, it could be anything. And what happens at that point of time, because our government has mandated two-factor authentication, we're going to get an OTP that is going to be sent to the customer, and customer is going to share the OTP, fraudster is going to do the same, and finally we are going to have a policy which is going to get issued in the customer's name. This is obviously one way of doing this entire mechanism. The other one that I wanted to also quickly talk about is the story of fear. And in this case, starts off very similar. There is a data breach, data is being sold over the dark web. Fraudster number 2, lady in question, comes into place. She's then going to call up a consumer, end user, and obviously scare the shit out of him, because what she's going to effectively say is, the KYC is getting outdated, it needs to be updated, calling up from so-and-so mobile operator. If it doesn't get updated, I'm going to essentially block your phone. And obviously, the end consumer phones are daily lives. I mean, imagine if my phone got blocked. So I'm going to say, no, tell me what should I do. Say, very easy, don't worry, I can immediately just update the KYC right now, download this app, and I'm going to get it done, right? So customer just downloads the app. Simple, easy, but what did he know? That it had remote access control. And remote access control, there it is, given off to the fraudster. Fraudster immediately initiates a transaction. Monetary, non-monetary, doesn't really matter, right? He's going to initiate a transaction. Bank will say, oh, I see the customer here. Let me send out an OTP. Once again, OTP, because of remote access, gets skimmed, sent back to the bank, and voila, what happens next is we have our transaction complete. This transaction could be as simple as a mobile number change on your phone, on your net banking. It could be an email change on your net banking, and that's enough to further perpetuate the trend of transaction fraud, right? So these are two basic cases that I talked about. But when we're talking about this, and Mr. Hardik Shah also talked about in the previous panel as well, right? The fact that there are certain challenges that we are facing as consumers as well as an industry, which essentially leads to these set of problems that we are seeing, right? And what are these inherent challenges? I think the biggest one, which I don't know whether it happened, I was not there in the morning, so I don't know whether anyone talked about it or not, but one thing that we really need to acknowledge is the fact that our consumers today are asking for a seamless experience, right? So as fraud investigation teams and as fraud control units, we want our onboarding of customers to have a lot of checks. We want to try and keep, let's do this check and let's do that check and let's try and get additional data and so on and so forth. But as soon as we try and get that in, what's our business guys going to tell us? No, that's not going to be acceptable. I'm sorry, friction in the process. Customers are going to get dropped off. That's not going to happen, right? So that is our reality. The reality of being able to, how do we do additional checks? How do we know more about our customers if our business is not going to ensure that we get that information in order to be able to do customer acquisition at large, in order to be able to grow at large, and so on and so forth. The second point, again someone said about ignorance of people and the consumers at large in India, right? Yes, we have a large digital population, we have a large digital adoption that's going on in the last few years, but there are pockets, and we've seen pockets in smaller towns, rural towns and cities. We've seen pockets of older people who don't necessarily have that kind of understanding. They've just newly adopted into the digital world, so therefore they don't really know what should be done and what shouldn't be done and what are the consequences of doing ABC and so on and so forth. Now at the other end of the spectrum are people who have used Facebook and Instagram from school and are doing this, from the back of their hand. They understand everything on the digital space, yet are so gullible that small things like $200, $300 coupons entices them enough for them to actually lower their guards and say, okay, it's 200, 300 rupees, it's not a small amount. Why don't I just go and give him this? It's just a small piece of information. Why don't I just click on that? Why don't I do this? And that's the second part, the other end of that spectrum. And the last and important thing, again, this is not an exhaustive list, it's just my indicative list. I'm sure there are other things that you could add to these challenges. But the last one is the fact that the platforms on which these financial transactions are actually happening. the merchants and other platforms on which it happens, according to our laws right now, have limited very little liability if there is a fraud transaction that happens on these platforms, right? The liability always resides either at the bank which is approving the transaction, or the insurance company or so on, so the company is approving the transaction, or the end consumer who at the end of the day is giving that two-factor OTP or whatever in order to be able to complete the transaction. So the middle person in the middle effectively is saying that, okay, hands off, I am facilitating the transaction, but I am therefore not responsible if there is a fraud that actually happens on my platform. Now, having said all of this, why don't I go through a quick survey that happened, right? We as Experian do this survey on a yearly basis. So this is about a year old, but I think it's still very relevant. It shows you a little bit of the dichotomy that's coming out, right? Now, if you see the first graph, which is on the left-hand side, what it essentially tells you is that 72% customers are, 74% of the customers actually value security as a part of their online experience. Much more than personalization and much more than convenience. Now this is what customers are really saying. They're saying that as a part of a transaction, I value security. If I see there are secure layers, I value that more. The customer also is saying that 74, this is what the customer is saying. But what is the customer actually doing? The middle one is telling you what the customer is actually doing, right? 74% of the customers are actually abandoning their cart if for a new account sign up, additional and greater information is being asked. So that's the second part of this entire conversation. So what are customers saying? I'm okay with security, I like security, show me that you have secure channels and I can do this. What they are also doing is that they are abandoning the cart if they are effectively asked for more information. But the last part, the right hand side circle at the end there, effectively is from a banking and a financial transaction perspective. There 72% people are saying that they are okay and they are willing to share more information, more access as well, if it means that they get a seamless journey, which essentially means that when we download apps, we are okay to give access to any of these apps to scrape our SMSs such that I don't have to go into my SMS, go and take my OTP from there and then put it into the app, right? That small exercise also seems very cumbersome to a lot of us, right? So we are fine, go scrape the SMS, take whatever information you want from the SMS and put the OTP on your own into your own app and then verify that and let it go ahead, right? So this is what the consumer sentiment at large is really talking about. Now, giving you a lot of that brief, right, what the challenges are, what we've seen as important points in this entire bit, what seems to be the consumer sentiments. So what could really be a possible solution, right? I've tried to articulate a few, again, not exhaustive, but something that I feel could really help us going forward, right? So the first one is being able to move away from a point-in-time authentication to continuous authentication, right? Now we have tools that are available that can actually authenticate the person at the other end of the spectrum, the other end of the device, every second of the entire session, and that's going to be important. And there are multiple ways in which you can do that. I do know that BioCash was in the morning here, so they do something on behavioral biometrics. So that's one very important way in which we can actually go ahead and do continuous authentication as well. The second one that we're talking about is how can you actually be able to do passive fingerprinting of the device. Now, just understand that the first one and the second one and all the ones that I'm going to be talking about actually do not cause any friction from a customer standpoint. All of this is happening passively, all of this is happening under the surface such that your customer really is not getting inconvenienced in any way, which essentially means that a good person, a good customer, doesn't necessarily see any friction, any impact, and nothing of that sort. It's the bad actors which will eventually get the impact at the end of this all, right? So when you're looking at passive fingerprinting, what you're effectively also looking at is device and what information that device really tell you. Now, a few years back, we used to be able to use IMEI numbers and device bind using IMEI numbers. Now we no longer have that, largely from a regulation standpoint. But there is additionally so much more information that your device can really throw out. which could be from the software aspects of the device, which could be from the hardware aspects of the device. Mind you, not looking at any of the PII, not looking at any of the SMSs on that person's database, not looking at any of the apps that they have, not looking at any of the phone contacts that they have, just through the software and hardware within the device, you are able to tell a lot of how the device is configured, whether it is a fraudster, whether it's a genuine users, whether it is a person who is continuously coming multiple times, and so on and so forth. So that's again a second part of the entire equation. The third is being able to triangulate different data points that you have. Now, I'm talking about data points that you already would have from a normal application flow or a normal transaction flow of a particular customer. It's not about asking for additional data. So for example, you might have a mobile number, you might have an email ID, most likely situations. You might also have some amount of ID documentation information, could be a PAN, could be an Aadhaar, could be any of the other government approved ID information points that you may already have. And then being able to triangulate, hit multiple different alternate data sources in order to be able to create a digital identity for that customer and validate whether all of those informations are really talking together or not. Are we effectively seeing, and what you will see in many fraudsters cases as well, and so many of you all may have gone through that, right? When you say identity theft, what always happens? The person will be Anjum, the PAN will be Anjum's, the Aadhaar will be Anjum's. But the phone number will not be Anjum's, right? Because the phone number now has to be an actual fraudster's phone number. The bank account may not be Anjum's, right? The bank account number has to be actually the fraudster's. Maybe even the email address will be the fraudster's. So if you are able to get additional information on all of these aspects and able to triangulate it all together, you will be able to get more insights into what this information is really talking about. Another one is being able to invest and build in consortiums as an industry. I understand that fraud is one aspect where all of us are in it together. It's a non-compete, right? One fraudster affecting a particular company at the end of the day is a problem for B company and C company and D company, because eventually it all comes around and comes back in circles, right? So at the end of the day, building consortiums, investing in consortiums will actually take us quite a long distance. Fraudsters work and play on the game of, or the law of averages, or look at the safety in numbers, right? No fraudster is going to do 5 applications or 5 transactions and be very happy. That's not how they work. All of them effectively are going to do hundreds and thousands and tens of thousands of such transactions, and not just with one particular company. They're going to spread it out across multiple different companies. At the end of the day, take चावल का गुट्ठा लो, दीवार पे फेंको, कुछ दाने तो चिपकेंगे. That's their thought process, right? I will do it for so many, some will stick, some will go through, that's good enough from their perspective. So at the end of the day, if you are able to build that consortium, if you are able to talk as an industry, banks, talks to stockbroking firms, talking to insurance companies, and so on and so forth, if there is that cohort that is being built, then we are able to effectively get more out of that data and build more out of this entire fraud pattern and behavior and so on. And finally, there's a lot of conversation that we were talked about, AI, ML and all of it. But AI, ML in just isolation doesn't necessarily work as fantastically well as it can work when it's combined with technology as well as your policy rules that you were talking about, right? A lot of people in the previous panel kept talking about the kind of rules that they built on their platforms, the kind of policies that they have on their platforms. So models that run with the data, that run with technology, as well as in cohesion and conjunction with policy and rules, are the ones that effectively make the most and the best impact, are able to predict the best, and also at the end of the day have the least amount of false positives. Now imagine a platform that actually can do all of this, right? And that's what we have at Experian. It's a platform that's called CrossCore, something that we've launched recently. We continuously keep building on top of it and keep building across it. What does it really do and what does it really have, right? When you look at it from a consumer standpoint, everything that I just said, so continuous authentication, so we have behavioral biometrics which will be able to help you do that. And for people who may or may not understand what behavioral biometrics is, this is essentially how a particular user interacts with his or her device, right? Each person's way of interacting with their own device, maybe a mobile phone or a laptop, is very unique and is very specific to that person, and that's what behavioral biometrics helps us understand. Second one is being able to inform device and data and device intelligence and use that passively in order to be able to authenticate whether the user and the device share a history, or whether the device is being used by fraudsters, whether it's being used for fraudulent purposes, so on and so forth. It might be the first time you've ever seen the device, but you'll still be able to tell whether this device is doing fraudulent behavior or not. The next one is, as I said, triaging of data. So all types of different alternate data sets which are available there in order to be able to pull, get information, marry them all together and see whether there are anomalies there. Experian also has the largest application fraud consortium in the country, so a lot of that information therefore is helpful in order to be able to identify all of these types of fraudsters. And finally, the ability to host AI ML models continuously exists as well. This is from a consumer standpoint and what I talked about earlier, but what is it from a user perspective? What is it from a bank, from an insurance company perspective, right? What it does have is obviously all of these are pre-built, pre-enabled and available for you all. What it also does is it's in modular fashion, so you really can pick and choose. So if from your use case, depending on your consumer set, depending on what types of frauds you're seeing, if you would want to pick and choose parts of this, some of these, entirety, it's possible. You can continuously change it as and when you go along the way, so on. What you can also do is a completely self-driven orchestration concept, which essentially means that the business user, not the IT, the business user can go into a UI and drag and drop and figure out which is the call that I need to do. Should I do parallel calls? Should I do sequential? Should I do one after the other? Should I put an if-then else statement which says that if continuous authentication gives a result of A, then only should I go into passive fingerprinting, and so on and so forth. The third piece is, okay, you have 4 or 5 things, and what is our reality? Our reality at the end of the day is, never will it happen that all 4 will say no, never will it happen that all 4 will say yes, right? I'm just giving you an example, right? If you had 4 pieces, you're going to have yeses and nos in the middle. What happens if, let's say, passive fingerprinting says, okay, somewhat problematic, but the rest all says good? What do you do then? What do you do when a consortium piece may tell you that, okay, this may be a fraudulent case, but the others are saying everything looks fine, looks clean? So these are constructs of strategies that we build based on our own methodologies of conservatism or aggression that we would be able to tell as fraud investigators of what do we need to do. So if we say that if I get 2 out of 3, I'm good, I'll reject that transaction, then let's go ahead. If within the 2 out of 3, if there are certain parameters, within the device that trigger that you would want to restrict the application, then you could do that as well. So that's another layer of, there's another layer of functionality that's available on the platform. And the last one, obviously, that's the most easiest, is that it has dashboards, it has reporting, it has all of those additional, tools that are now per se, passe, everyone really needs to have them. Nothing, and you really can't do it. They are hygiene, right? And at the end of the day, all of this is a SaaS-based solution, which essentially means, as one lady was talking about it just some time before, there is little to no capex. All of this is pay as you go, which means that it is transactional usage. You start, you use, you see the benefit, continue, you want to stop one module, you start the other module, all possible to be done within that particular platform. So this is something that I wanted to start off, and I want to leave you all, this is my last slide, and I wanted to leave you all with what I see, what we see at Experian as what the ID profile really is going to become, right? So if you can see over here, we've started out on the left hand side. There is PII information, which is our own identity information. We have some traditional devices, which is your laptops. There is network information which is coming in, things like IP and so on and so forth. Then there is, at the end of the day, some transactional information which is coming in, mobile information which is coming in. I think we are still, in India, we are in this phase, right? We have information from an ID perspective up until that point, where we hit it on the mobile. We have mobile information. So we have our consumers' information from the PII to the network to some transactions, what type of transactions they do. So therefore, what behaviors do they have? Do they Do they do transact in the night? Do they transact in the morning, in the middle of the day? How much value transactions do they do? And what type of mobile do they use? What is maybe their location when they do the transaction on the mobile and so on. But that's where we end. The next layer obviously is behavior in terms of how you interact with the device. It's behavioral biometrics, and I'm not talking about behavioral transactionally. And the next one, the one which goes after that, obviously becomes the identity which is created through things like virtual assistants, right? You've heard of Google Assist. You have heard of how now Google Assist can actually make your salon bookings for you, make transactions for you, and so on and so forth. How you can also look at things is whether person is associated with IoTs, right? Which could be your car, which could be your fridge, which could be your any other instrument, Alexa, for example, at your home. All of these are IoTs which are actually adding into our identity. And those are the ones that are effectively going to create the whole scale, singular identity of an individual going forward. So that was the thought that I wanted to leave you all with. I think at the end of the day, fraud is something I don't think I can ever say that it's going to go away. Fraud is always going to evolve. Fraudsters are always going to evolve. People like us and other people in the market are going to evolve tools, technologies such as yourselves are going to think of ways and means in which we can better fraudsters and catch them fraudsters. At the end of the day, it's always going to be better to be ahead of the curve in this particular game than to ride the curve. And I just hope that all of us collectively are going to be ahead of that curve. So thank you very much for the time.
Thank you so much, Anjum. Ladies and gentlemen, big round of applause for Anjum Babaiah, General Manager, Decision Analytics from Experian India. Anjum, I would request you to kindly be on stage. I would now like to call on stage Mr. Rajaram Manian, CRO from Adani Capital, to kindly do the honors of felicitating our honorable speaker here. Thank you so much, Rajaramji, for doing the honors. That was, ladies and gentlemen, Ms. Anjum Babaiah talking on going beyond KYC and the two-factor authentication with a wonderful presentation and very informative as